Most people chase hype, stocks, crypto, real estate trends, fearing they'll miss out. But the best investors? They spot value before the crowd, focusing on fundamental, durable qualities others overlook. Real wealth is built by recognizing what truly matters, not by gambling on the next big thing. Today we'll show you how to spot great investments, stocks, real estate, or business, using the same filters professionals rely on. By the end, you'll have a powerful toolkit to evaluate any opportunity. Let's break it down. The first and most important filter: does the investment solve a real painful problem? Not a minor inconvenience, a genuine pain point that costs people time, money, or peace of mind. The most successful businesses and valuable assets exist to fulfill fundamental needs. Don't just ask, what do they sell? Ask, what problem do they solve? Is it a software that saves companies thousands of hours? A medical device that improves lives? A product that makes daily life easier? The more painful the problem, the more people are willing to pay for the solution. This creates sticky, resilient demand. I look for businesses that are essential, not just fashionable. Food, shelter, healthcare, energy. These needs don't change with trends. In real estate, a well-located apartment solves the problem of shelter where people need to live. The more acute the housing shortage, the more valuable your solution. For small businesses, think of a plumber solving a flooded basement, or an accountant handling tax complexity. When the value proposition is clear and necessary, you have the foundation of a fantastic investment. Demand is real and urgent, not speculative. Hype fades, but a solution to a real problem endures. Start your analysis here, and you'll filter out most of the noise. Focus on the underlying engine, the ability to serve a genuine need. Amazon solved inconvenient shopping. Google solved finding information. These weren't just clever ideas, they were solutions to massive problems. Before you look at financials, ask, if this disappeared tomorrow, who would be hurt? The bigger the pain, the more durable the demand. That demand underpins revenue, growth, and protects your capital. Without it, you're just speculating. Value always starts with solving a real problem. If you can't find a significant problem, walk away. This principle is your North Star. Always choose utility over hype. Next, does the investment have clear, scalable growth potential? A great investment isn't just valuable today, it can become much more valuable tomorrow. Scalability means revenue can grow without costs rising just as fast. Software is a classic example. High upfront cost, but each new customer adds huge profit. Contrast that with a solo consultant. Revenue is capped by hours in a day. Look for businesses with few constraints on growth. Check the total addressable market, TAM. Is it large and expanding? A niche product in a shrinking market has limited upside, but a company in a massive growing industry, like cloud computing, has a huge runway. In real estate, scaling means more than just buying more properties. An apartment building lets you increase rents, add value, and improve management, all more scalable than single homes. Seek compounding advantages. Does growth make the business stronger? Network effects, like social media or marketplaces, are powerful drivers. Growth can also come from expanding into new markets or products. Amazon started with books, then expanded everywhere. When evaluating, map out the path to growth. Is it clear, logical, and based on real strategy? Look for specific growth drivers, not vague promises. Durable, steady growth is more valuable than explosive, risky growth. Project out 5 or 10 years. Can this become a dominant player? The key question: what's the realistic path for this investment to become 5 or 10 times more valuable? If you can't see it, the upside is limited. We're looking for opportunities that can fundamentally change your financial future. Scalable growth is what turns a good investment into a life-changing one. Don't settle for limited upside. Find the investments with real compounding potential. That's how you build lasting wealth. Growth isn't just about size, it's about leverage and scalability. Make sure your investment can truly scale. Now let's get real. The financials must make sense. A great story is worthless if the numbers don't back it up. Start with profit margins. High gross margins and operating margins mean pricing power and efficiency. Low margins make a business vulnerable to cost increases. Next, cash flow is king. Profit can be manipulated, but cash in the bank is real. Look for a history of strong positive operating cash flow. Free cash flow, what's left after expenses and investments, is a sign of a healthy money-generating business. Companies burning cash are always at risk, Needing more investor money to survive? Check the balance sheet. Manageable debt is fine, but too much is a red flag. High debt makes a company fragile in downturns. Look for a reasonable debt-to-equity ratio and enough cash to cover short-term needs. Recurring revenue is another key. Subscriptions, long-term contracts, or monthly rent make income predictable and stable. Predictability reduces risk. Finally, valuation matters. Even the best company is a bad investment if you overpay. Use metrics like price to earnings, price to sales, and price to free cash flow. Compare to historical averages and competitors. Don't chase hype. Look for quality businesses at fair prices. In real estate, run the numbers. Cap rate, cash-on-cash return, and whether rent covers all expenses. If the deal only works if prices rise, it's speculation, not investing. The numbers must work from day one. You don't need to be a CPA. Just focus on high margins, strong cash flow, low debt, repeatable income, and a reasonable price. If you find all these, you've dramatically increased your chances of success. The financials are the foundation. If they're cracked, the whole investment collapses. Do your homework here. This is how you separate contenders from pretenders. Numbers don't lie. Let them guide you. Don't be afraid to dig into reports or spreadsheets. The best investments are obvious in the numbers. Trust the math, not the marketing. Solid financials are your safety net. Never skip this step. Next, what protects this investment from competition? That's the moat, a structural advantage that keeps profits safe. A moat lets a business maintain high returns and market share over time. The best companies have more than one moat. Brand loyalty is powerful. Think Apple or Coca-Cola. People pay more because they trust the brand. Patents and intellectual property give legal monopolies, common in tech and pharma. But the most durable moats last beyond patents. Network effects are huge. Every new user makes the platform more valuable for everyone. Facebook, Visa, Airbnb, these thrive on network effects. Switching costs matter too. If it's a pain to switch, customers stay. Banks and enterprise software are classic examples. Operational excellence and cost advantages like Walmart or Amazon let companies offer prices competitors can't match. In real estate, the moat is often location, proximity to jobs, schools, or parks. Zoning laws can also create moats by limiting new supply. When analyzing, ask, what makes this business hard to copy? If it's just being good, that's not enough. Look for structural advantages, not just temporary trends. A business without a moat is a sitting duck. Competition will erode profits. A wide, deep moat lets a company compound capital for decades. Check the financials for evidence high, stable returns on invested capital. ROIC signal a real moat. In real estate, a unique location or regulatory barrier is your moat. The moat is your margin of safety. Even if mistakes happen, a strong moat gives time to recover. Finding a business with a durable moat is like finding a golden ticket. It's the key to long-term, low-risk compounding. Don't invest if you can't identify the moat. The best investments are protected by more than just good execution. Moats turn good companies into great investments. Always ask, what keeps competitors out? If you can't answer, move on. Moats are rare. Treasure them. They're your best defense against risk. Make the moat a non-negotiable filter. Finally, who's running the show? Leadership is the fifth core filter. The right people can make or break an investment. Look for leaders who are both visionary and disciplined. Visionary leaders think long-term, not just about next quarter's numbers. They inspire employees, customers, and investors with a clear direction. But vision alone isn't enough. Discipline in execution is critical. Great leaders are smart capital allocators, investing in high-return projects and avoiding waste. Transparency matters. Do they own mistakes and communicate clearly? Integrity is non-negotiable. Adaptability is key. The world changes fast and leaders must pivot when needed. In real estate, you or your property manager are the leadership. Discipline and vision matter just as much. Skin in the game is a great sign. Founders or CEOs with significant ownership are aligned with you. Check executive compensation and insider buying for alignment. Ultimately, you're entrusting your capital to this team. Study their track record, philosophy, and actions. A great business with a great moat and great leadership is the trifecta. It's rare, but when you find it, act decisively. Don't settle for mediocre management. Leadership is the difference between potential and performance. Make it a core part of your analysis. If an investment passes all 5 core filters, it's already top tier. But pros use bonus filters for an extra edge. First, skin in the game. High insider ownership aligns interests. Second, underhyped quality. Find high-quality businesses the market ignores. Third, optionality. Look for hidden future opportunities, like new products or markets. Fourth, traction without buzz. Quietly growing companies not yet in the spotlight. Fifth, simplicity. If you can't explain the business to a 10-year-old, don't invest. In real estate, these apply too. Your own down payment, solid properties in stable areas, future development options, and simple cash-flowing deals. These bonus filters refine your focus and help you find truly great opportunities. They're not strict requirements, but when you find them, your confidence should soar. The core filters are the outline. These are the details that bring the picture into focus. They help you hold through market ups and downs. Add them to your checklist: skin in the game, underhyped quality, optionality, traction without buzz, and simplicity. Use them to sharpen your thinking and spot rare high-potential investments. The best opportunities often hide where others aren't looking. These filters help you see what others miss. They're your edge in a noisy market. Don't ignore them. Use them to build conviction. The more boxes you check, the better your odds. That's how pros find outsized returns with lower risk. There you have it. The framework for separating real opportunities from the noise. It starts with solving a real problem, scalable growth, and solid financials. Then it's protected by a moat and guided by visionary leadership. Hype is fleeting, but these principles are timeless. The more you practice, the faster you'll spot great investments. Train your eye for value, not noise. Your future self will thank you for disciplined decisions. Download the free investment opportunity scorecard below to apply these filters. Next on Wealthfully Yours, how the wealthy analyze risk before they invest. See you there.